Hi there, it's Tamala with your market update. Let's get right to the slides. So we really want to answer a question that I think is on the top of your mind. Before we do that, let's talk about a little housekeeping. Please visit our website. Give us a call if you have any questions. Like, comment, and subscribe for future videos that we get to put out and information that we get to share to you. Let's move right on in and let's answer that question that's on the top of everyone's mind. When is the economy going to fully recover? Probably we're just asking yourself that question. Well, we've got some information we want to share, starting out with what major financial institutions are calling for in this second half recovery. What you see in this slide is four major financial institutions: Goldman Sachs, JP Morgan, Morgan Stanley, and Wells Fargo, and their predictions for the second quarter this year through the end of the year. What we know right now is the first quarter has come in, and we see the GDP constricting or being negative at 4.8%, and then this wild ride down in the second quarter. Even now, as we start to talk about businesses opening back up, economic activity has slowed across the country. In the third quarter, 3 of the 4 financial institutions are calling for positive economic recovery. And then in the fourth quarter, all 4 of them, Goldman Sachs, JP Morgan, Morgan Stanley, and Wells Fargo, are all calling for a positive economic recovery as we start to come back online with businesses. So as we start to look to the second half of the year, we're looking to more businesses, more things coming back online, more economic activity growth, and we're looking at something that makes this unique. So what makes it unique right now are the 3 sciences that economists have to deal with. First, we have the business science, and that's what they're normally used to doing. That's answering the question, how has the economy rebounded from a similar slowdown in the past? Taking a situation and saying, how has this performed in the past? And being able to answer that question. Well, we're in a unique time and a unique situation right now. And we need to layer on 2 additional sciences. The first being the health science. And that's answering the question, when will COVID-19 be under control, and will there be another flare-up of the virus this fall? And they have to take into account, as they're making these projections, the next part, which is the people science. And that's after businesses are fully operational. How long will it take for American consumers to return to normal consumption patterns? As an example, going out to a movie, maybe flying on an airplane, going to a concert, attending a sporting event. And while we deal with the situation that is coronavirus, economists are dealing with answering a lot of questions on these projections. There's a question about a vaccine. How do we open up the economy in a safe way and bring things back online? There are a lot of things that are unknown right now. But what we do know, we know that we started this year stronger than ever. We're at a record low interest rate environment. Equity is strong among homeowners. We're in a high unemployment time right now, hopefully temporarily, and we know the Fed is doing everything they can to support the economy. We also can be confident that no one is calling for an L recovery. We've heard the terms U and V, but an L recovery is when the economy goes down and it stays down. This is not what we want, and no one is calling for that, and that is good news. I want to share a quote from the chief economist for Freddie Mac. Although the uncertainty of the crisis means forecasts of economic activity are more unclear than usual, we expect that most of the economic damage from the virus will be contained to the first half of this year. Going forward, we should see recovery starting in the second half of 2020. And I'd also like to bring in another quote from CNBC. Evidence is mounting that homebuyers may be coming back to the market after demand plummeted in the past month due to the coronavirus. And as your local real estate expert, I can tell that we are starting to see the evidence of homebuyers coming back. Let's talk about that for a minute. This graph is from Showing Time, and it depicts the showings across North America. And what you see there, as we started off the year, we're trending up, and then the beginning of March, we just fell off like as if in a cliff as consumers retreated to our homes out of fear of contracting the coronavirus. But you see this bottoming out across the middle of April, and then a rise back up. Now, some of that is going to be due to pent-up demand as people retreated during the quarantine. I don't know if that trend continues at such a steep pace going up. But it's safe to say that we've seen a bottom right there in the showings. And so what we can expect here in the second half of the year, some good news that we want to bring to you is that the U.S. homeownership rate is climbing. We expect that to keep climbing. You know, after a bottom out the last 4 years, we've seen this upward trend of people wanting to own a home, wanting the benefits of homeownership. And why is that happening? Well, the median asking rent is part of that. A lot of it's due to the rising cost of rent across the country. And renters don't get the advantages of a refinance, the tax advantages of homeownership, or the pride of homeownership. And we know that through studies we've looked at, renters are saying more and more, I want to become a homeowner. And as a matter of fact, just in the last week, had a closing, said to the person that was closing, the buyer that was closing, and now you just closed on your new home, congratulations. And the buyer said to me, I closed on my own home. That definitely tells me that it's happening in our local market, that desire for home ownership, your own home, is definitely occurring in our area. There's some more good news, and that's the percentage of people that have equity in their homes. It rose from 37% to 42.1% for 2020. And that is one of the main advantages of buying a home. Buying a home is building the equity. Here's 42.1% that have 100% equity in their homes. The other interesting thing is that 58.7% of all homes in America have 60% equity in their home. 60% equity in their home. Pretty amazing. 16.6%. You may be asking yourself, well, why is that important? That the amount of people that have equity over 60% is now at 16.6%. Well, if you think about it, back in 2008, a lot of people used their houses as ATMs and were lessening the equity in their home. You know, they were buying depreciating assets, maybe a car, vacation, something like that. And then as people used their houses as ATMs, we were lessening the equity in their home. And then as soon as the prices started to drift a little bit downward, that leads to a lot of challenges. We have the exact opposite situation right now. It seems that people learned their lesson from 10 years ago, and they're really positioning themselves differently in equity. And it's crucially important that so much equity is in their home right now for a whole bunch of different reasons. Number one is that when people have that much equity in their home, they aren't going to just walk away, pushing up the foreclosure rate like in 2008. So our housing market is much more stable than it was in 2008. And that is going to be one of the driving forces for our economic recovery. And as you can see here, Americans are sitting on tremendous equity. 42.1% of all homes are owned free and clear, as it showed in the last slide. They have over 100% equity in their homes. This one, 177,000, the average equity of the mortgaged home, meaning that's how much equity they have in their home, even if it's mortgaged. And we're back to this final slide, our contact information. I hope that some of this information has been valuable. I hope that we've been able to share some. Please like, subscribe, comment, share our information with others as we guide you through and give you these updates, staying on top of what's happening in the market. We're really grateful for you spending this time listening to the monthly market report. And as I wrap up here, I'd like to remind you that our buyer and seller guides will be available in June on our website. I'm Tamala Stobbs with Connect Homeowners, and we'll see you next month on the monthly market report. And until then, stay safe, stay healthy, and thanks for listening.